Inflation in the United States. What we know so far is the PCE inflation is rising while the standard inflation is dropping. So therefore, I believe the next movement close to 3% PCE inflation is going to keep the Federal Reserve away from next interest rate cuts. Not even that. War in Middle East between Israel and US forces against Iranian regime is causing a massive volatility in the oil market and therefore could cause a new inflation shock. Hello traders and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here to give you a quick update on inflation on United States. PCE inflation is coming to be published by Friday. We want to make a special report on this. If you have seen our previous report, you know already that we are very precise in our prescriptions on the market direction, and in this case it's gonna be in the same line. Now I also gonna talk about the global inflation, not only to see United States inflation evolution, but also see the inflation evolution in relation with the rest of the big economies and also the monetary policies applied by those central banks. So you better saw this full video because it's gonna give you a quick update of the global inflation around United States and PCE inflation. Now before we start with the details, let me remind you, if you are not subscribed to this channel, shame on you, you should click on the subscription button and click also on the bell to receive notifications anytime we update new market content. Now it's time to go to the presentation. As usual, I have done a presentation to give you all details and do not miss any information that I consider relevant for the current report. We are going to see at the end of this report, obviously, technical analysis data and charts related with SP500, related with also dollar evolution and oil. But mainly also the difference between the PCE inflation and the IPC inflation, which is the standard inflation versus the PCE inflation, personal customer expenditure, which is the PCE, the favorite one by Federal Reserve to take monetary policy decisions. So that's why it's important. And the reason why I mentioned this is because one is decreasing, the other one is rising, and that's the most important factor. Global inflation, where we stand in 2026. As you can see, also the war between Iran, US and Israel is a main factor that could cause a disruption on the inflation evolution, especially globally, to United States indirectly, but also mainly to Europe and Asia. I have also had here as a key takeaway for investors. Central banks are in a bind. They can't cut rates easily, but hiking risk recession. That's the main decision. The dystopian choice they have to take in the future is like either preserve the growth rate of the Western economies or cut the interest rates to generate growth, risking a new inflation wave. United States Federal Reserve inflation problem. We got the core inflation PCE at 3% current reading, and we also got a trend because the last one it was 2.8%. So it's growing, and the previous one it was 2.6%. So the PCE inflation is growing. That's why the expectations is in around 3% for the next publication, right? Headline CPI is 2.4% published on Wednesday. It seems to be in line with the expectations. It is also falling in general terms, which is good news for the Federal Reserve, but still, Federal Reserve is paying more attention to the PCE inflation than the IPC inflation. That's why I believe it's not good news in terms of the PCE inflation remains still close to 3%. Core inflation accelerating. The Fed has cut 3 times the interest rates, but it doesn't seem that they're going to keep cutting the interest rates, not especially if we consider the inflation is still there, or as the Federal Reserve has called, PCE inflation is stickier compared with the standard inflation. One of the things we mentioned in previous reports, and I think is really important to highlight again here, is the new Federal Reserve chairman, which is, if the things are going in the line expected, it will be Kevin Warsh. Kevin Warsh has also mentioned that probably cut the interest rates could not cause inflation in the future in the United States because artificial intelligence is increasing the productivity regardless what is going on with the labor market. So therefore, in the future, we could see that the unemployment rate is rising and is not causing any movement in inflation. That in general terms going to decrease because an increase on productivity, it means in realistic terms that we produce more products, more services with less people, and therefore it's an increase on the total supply of goods and services, and therefore a reduction of the general inflation of those goods and services. Easy to understand in a simple equation. Globally, the inflation seems to be low in European Union with 1.7%. The rate has also low, it's 2%. In United Kingdom is 3%, coming through 3.8% on November 2025, which it was the highest inflation in G7 economies. And the interest rates are still on 3.75%. Simple. European Union is reducing the inflation and therefore they can cut the interest rates. United Kingdom remains in a high inflation numbers and therefore Bank of England is trying to cut the interest rate slower and more cautious in terms of monetary policies. In terms of Japan and the rest of the countries, Australia and Switzerland, the thing that we can notice here is for the first time in a very, very long period, we got central banks not longer moving together in terms of monetary policies. We have seen Australian central bank rising the interest rates by 1% because they experience an increase also in inflation by 3.4%. So, rising to 3.85% interest rates above the inflation of 3.4%. In the case of Japan, they finally experienced inflation after many years with deflation, which is around 2%, and that's why they got as a target, not rise the interest rates to 1%. Switzerland is suffering a 0.1% inflation, and it's more likely to reduce the interest rates to a negative area, which is something they did in the past, because when globally instability is rising, the demand of reserves in Switzerland and in Swiss franc is rising, and therefore they make really expensive the currency. They cause a lot of stress on the Swiss franc, and the movement by Central Bank of Switzerland is just adjust those pressures on the demand to change the basically push back those ones who try to increase the reserves and deposits, bank deposits in Switzerland, do the increase on the global risk. Now, if you take a look on the evolution, PCE inflation on the top of the window, on the window, you can see the chart is rising to 3%, basically 2.19% last readings in December. So PCE inflation, the most important one, followed by the Federal Reserve. The core PCE inflation is giving us almost 3%. It's clearly rising. And in terms of standard inflation, the core inflation is dropping to around 2.5%. The last reading this week, Wednesday, was 2.4%. In general terms, we can see that if the PCE inflation is not dropping, the central bank, in this case Federal Reserve, is going to be in trouble to justify next cut interest rates. Sell America is one of the things that has been be repeating in Wall Street recently. The main reason is because we can see also the stress caused by this war between Israel, United States, and Iran. It's, in my opinion, pushing out a lot of international investors from U.S. assets. In particular, we can see that the rise on the yields on U.S. bond, 2-year U.S. bond, is clearly so the lack of interest on U.S. assets and probably a kind of punishment by international investors on U.S. assets, considering that U.S. is intervened in a war in Iran, causing instability also in those allied countries like Gulf monarchies who are right now under attack. Surprisingly, we got the dollar rising. I say surprisingly because the bond is dropping, but the dollar is rising, probably caused by, again, sell-off in certain U.S. assets, recovering the dollars and increasing the demand of dollars globally. But the index is rising, as you can see. And in my opinion, in my eyes, I believe this trend is not going to change. It's going to keep moving forward, probably to the 100 points on dollar index. And therefore, it means that the main bullish reasons why this market is rising is the instability, global instability. So these indicate that global instability is not going to disappear. SP500 is dropping. We can see clearly a bearish trend. They tried to recover the market after the big surprise, with the attack of US and Israel on Iran 2 weeks ago, 10 days ago. But it doesn't seem to be enough. They try to stabilize the market about 6,800 points, especially related with the Hormuz strand and closed by Iranian forces and Donald Trump trying to convince the public opinion that everything is under control. And soon the boat's gonna cross the Hormuz Strait and the market's gonna be back to normal, which we don't believe is the case. And obviously, you can see also the massive volatility experience on UK Brent oil, which is the main one that is crossing Hormuz and this area West Middle East. And we can see a massive volatility since the conflict started, almost 70% rise, reaching $120, dropping rapidly after Donald Trump mentioned that everything was under control, that the operation was over, and the Hormuz will be open. I don't think it's the case. I think this conflict has still many things to see, and the evolution of the conflict probably gonna take at least several weeks, and therefore we're gonna see a negative evolution on the market in the same direction. I hope this report is you find it helpful. If that's the case, give me a thumb up and leave your comments on the bottom of the video. Take care. Bye bye.